Okay, cool. Guys, it's freezing. Freezing in here. Yo. And I should have told you earlier, then it could have been
Chifipa Arabile Kumete, how are you doing? No, very well, very well. Thank you so much for the time, Mdara. Thank you, man. I appreciate it.
Not a problem. I'm here for you.
Fantastic. So we've
How are you, Aman? Is Aman still there?
Yes, Aman is right here.
Hi, how are you?
Good stuff. So we've just gone to an ad break. We'll be with you in just a moment, Chifipa.
Not a problem.
Now, President Cyril Ramaphosa has warned that without reform of the global financial system, Africa risks a lost decade of development. Many countries are overwhelmed by debt, and the G20 is now looking at ways to make borrowing fairer and more sustainable. For more, let's speak to Chifipa Mhango, the Chief Economist and Director at Economic and Research Strategy at Don Consultancy Group. Chifipa, thank you so much for the time. Appreciate it this morning. Just want to read from the document that was shared by President Cyril Ramaphosa, the leader's declaration here, also speaking about while the risk of a systemic debt crisis appears to be broadly contained for now, many vulnerable low and middle income countries face high financing costs, large external refinancing needs, and a significant outflow of private capital. This is debt that these lower to middle income countries owe to international investors and multilateral institutions in other countries. How harmful is this to the economic growth of the global south?
I think, Arabia, it is quite helpful in terms of the growth patterns for any developing countries. Just to paint a picture around it, if you're talking from the African perspective, almost 10 African countries are going through what we define as debt distress. Debt distress means that inability for any country to meet its financial obligations, and therefore they are now in a position whereby they require debt restructuring. So 10 African countries are in that position. If you look at from the global dynamics, you're talking about almost close to 20 least developing countries who are in the debt distress environment. If you look at it from the point of view of what that means, is that almost 60 least developing countries are actually facing a situation whereby 10% of their budget revenue is actually being spent on debt servicing rather than on developmental expenditure. So, for instance, debt servicing for these 60 least developing countries, it's actually even more than what is spent on health and education. So that is a real implications towards the developmental aspects of the African continent or even least developing countries when it comes to debt issues in terms of the global dynamics.
Yeah, so what is being asked for here? Because is it cheaper interest rates when it comes to that debt repayment, or is it the cancellation of that debt? What exactly do you think that should be asked for here in reconsidering the reforms around debt vulnerability for global South and African nations?
I think one of the key elements is about the high interest rates, which is charged to most of these least developing countries, which actually does not meet in terms of basis on the point of view of the financial muscle of most of these African countries. So you are looking at a situation whereby there has to be an element of debt restructuring or even debt cancellation as one of the key elements. So the whole restructuring of or reforming of the G20 framework, I think, is very key here. One of the issues that the countries face is that, for instance, when a country is going through discussions of debt restructuring, there has to be an element of suspension of the current obligations until the talks are finalized. You also have to look at creating a mandate environment where it's such that there's element of concessional funding and also participation of all lenders in terms of the discussions, because you can't have a situation where you're only discussing with IMF or World Bank when other African countries, in terms of the debt obligations, some of them, they're actually bilateral credit agreements. So all that I think has to be put in context. So it's about element of transparency into the whole debt discussion with regard to element of term loans as well as interest rates. Because one of the disadvantages we face on the African continent per se is that the credit rating agencies are also not playing a strategic role in terms of assisting the African countries in terms of how the credit rating is actually done on the continent.
Can this be done, though? And I only ask because the conversation has been happening for quite a number of years at this point in time. And yes, it's probably ramped up, and it culminated in this G20 being a big conversation and talking point. But can we actually have some kind of change, reform, and restructuring of the debt for African countries?
Yes, it can be done, but I think there are two aspects there. One is the domestic environment solutions, but the others are also external environment solutions. And what I mean by that is that from the domestic perspective point of view, each and every country must look at how best they can improve their domestic revenue collection base. So in other words, expanding their economic activity, but also looking at how best the tax revenues collection system can actually be stimulated to make it more efficient. That's the domestic aspects. But also looking at the element of what we call financial discipline. Some of the reasons why some of these African countries are actually in this debt situation because of fiscal mismanagement. And we have seen cases like that happening, for example, in countries like Malawi, which are going through that kind of discussion with IMF. As we speak now, yesterday, IMF was in Malawi, meeting the Malawian president, discussing the whole environment about debt issues, which Malawi is actually in a position where it can't even meet its own obligation, but also they are looking at restructuring. So those are, I think, elements from the point of view of domestic aspects. I think the element of the external aspect solutions will mean that mobilization of concession of finance. For example, some of the reasons you look at why some of these African countries have actually been in this position is because of external shocks, climate change disasters. You're looking at issues of currency devaluation policies, which IMF also prescribed to these African countries. But also you're looking at market access, which high tariffs, market access to African countries would not even encourage revenue generation from the point of view of beefing up their fiscus. So it's all those elements that have to be looked into context and see how best this can actually be done. But I think I also want to bring the element of the IMF, what we define as IMF special drawing rights, where I think if you look at the definition of that, it's such a way that it's more around driven by poverty reduction, eligibility in terms of the African countries. So it actually a fund which, from the IMF perspective, offers low interest rates in terms of lending. I think most of the African countries should actually be eligible to that kind of fund for in terms of lending perspective or borrowing perspectives. I think that's something that can actually be taken into consideration in terms of amending the whole environment with regard to the G20 framework.
But Chifipa, that was the reason why we went and created the new development bank, isn't it? The BRICS Bank, as it were, to try and help a lot more emerging market nations. You also had a lot more emerging market nations or global South nations joining the BRICS Bank too, or the BRICS group of nations. Why has that not been able to shift things along, even if it is just marginally at the edges?
Well, what you need to understand that there is always a geopolitical or factor that are at play. If you study the whole element about the Cold War, now what we seem to be happening that we are now having a Cold War in the economic sense. There is a fight around the issue of dollarization of the economy, where some countries want to move away from the dollar, while the US is actually fighting for the element of maintenance of the dollar in terms of domination with regard to even lending and also in terms of trade. So I think those dynamics will always come into play. I know if you look at some of the situations which are happening for some other countries, for instance, just alone the American, the US president not attending the G20, I think it actually amplifies the whole element about the global dynamics that are taking place even in terms of the Cold War, which has now shifted from the element of political to becoming now an economic war. So these are the elements whereby these kind of battles are actually now even penetrating the space when it comes to implementation of some of these initiatives. So, for example, the new development bank, much as it's actually coming in there, and you find out, no, if you happen to be, let's say, getting your lending or borrowing from the new development bank, there can be implications in terms of the U.S. increasing your tariffs. So those are some of the things that globally we're actually facing with regard to implementation of some of the initiatives. So some countries which rely on a donor funding or rely on institutions such as IMF, on World Bank, they're actually in a way in a fix in terms of where they can go. So I think it's a big challenge that we're facing globally.
Yeah, and I'm just continuing to read here as well. I mean, saying that we note the voluntary use of crisis-resilient debt clauses where appropriate. And those debt clauses are when a country becomes vulnerable again and now can't pay its debt in that specific time frame that has been put forward. Should those debt-resilient debt clauses actually be enhanced? Should those be a standard protocol and part of all of these conversations in order to get the Global South investing back in itself, healthcare, school, infrastructure, etc.?
Yeah, I think that's quite right. I think the core there should be about flexibility of the lending environment, especially when it comes to the African countries. So that should be the core here. Where there's element of, for example, external shocks, you have to look at being flexible towards the African countries. You know, we had issues of COVID. COVID was not a man-made issue. It was something which hit most of the economies from the issue of trade dynamics. Most of the African countries were actually affected, and that affected the growth patterns of the African countries. So when you have got elements like that, there has to be element of flexibility in terms of loan repayment. You know, you've got issues of climate change. One of the things that happens when you go to climate change or disasters that, for example, floods. You know, just now in KZN, we're facing element of floods, which happened yesterday. That has damaged infrastructure. Now, what that means that you then divert resources away from, let's say, healthcare, education, in terms of going back to the communities and now moving the resources towards supporting the people who have been affected by floods. And when a country is going through that, you cannot then come and say, no, you still owe us this amount of money, please pay. I think there has to be an element of flexibility in terms of how these things are done.
Very important here, because if this changes the way things are done, we get a lot more flowing back into these developing economies, and actually they get to then really develop. Chifipa, thank you so much for the time.